For the first half of 2016, defensive markets had been one of the big places to be. They were under strong accumulation. We had big rallies for gold, big rallies for bonds, big rallies for the yen. We're now, however, as we move into the second half, starting to see some of that roll over and corrections underway in defensive havens as capital starts to move out back into risk markets. We're seeing new highs in stocks. We're seeing a rebound in the pound, and some of the fears are starting to fade for now. Why? Well, we had a big shakeup and a big shake out following the Brexit vote, but now a few weeks later we've got a new government taking charge much quicker than expected, and people starting to focus on where do things move forward. Meanwhile, we're looking at potential fiscal support from the UK government. We're looking at monetary support from the Bank of England, likely in August, and we're also looking at support for Japan as well, with Prime Minister Abe and his big win in the upper house has given him the mandate to proceed with more reforms, to proceed with more fiscal and monetary stimulus. So there's more support for Japan as well, and so we're seeing in particular some of that capital that's been going into the yen out of fear is starting to move back, and in fact that's really important because the yen in particular, those inflows had been counterproductive. Driving up the yen works against the Bank of Japan and Kuroda's QQE program, so to see the yen start to come off also can provide some stimulus to Japan. The other thing to note, we're seeing really good confidence in U.S. stocks with the Dow and the S&P heading to new highs on the back of strong earnings reports. We're off to a positive start to earnings season. That's also helping to rebuild confidence and reduce the need for capital in defensive havens. So we look like we're starting to see some rollovers and pullbacks here. I'll kick it off with gold. Gold looks like it's completed a double top here up around 1375, starting to come back off. It's dropped into around 1325. First support around 13, but I actually think it could retest in here about 1285. There's a Fibonacci cluster and there's a 50-day moving average, and here on the RSI we've got the rollover telling us upward momentum is fading and a downturn is pending. Also here looking at the bonds had gone totally haywire and sending yields, driving yields down into negative numbers. But now let's look at the U.S. Treasury bond here. We're seeing this starting to roll over and give way as well. Early in the last few days here, extremely overbought on the RSI, now starting to roll down, regular trading correction underway. We're in and around 174. This 169, 170 area could be retested in and around the round number and the 50-day moving average. Also looking at the U.S. dollar index, U.S. dollar got punched up on the Brexit vote, but in actuality, the Fed's starting to go the other way. We had the dollar index trading up above 96. Now, historically, my feeling has been that up at 100, the dollar was pricing in 4 rate hikes this year. Around 95, or the current 94 to 96 range, dollar pricing in 2 rate hikes this year. 90 would be 0, and about 92 and a half, 93 would be pricing in 1 rate hike this year. The dollar had actually, before the Brexit vote, gotten down to about 93 or pricing in 1 hike this year, until we had when the pound collapsed, it drove up, and the euro, and took the euro down with it, drove up the U.S. dollar index. So we had this big spike, but since then it's been flattening out because the Fed is not likely to be that hawkish for the rest of the year. I still think you might get them to see doing 1 rate hike after the U.S. election, though, in December. I don't think they want to do anything between now and then. I think it would also, waiting till after the election, give them time to see where the land lies on the Brexit situation as well, and which way the wind is blowing there. So we could see the U.S. dollar come off. It's already tried to break 96. If it takes it out, there's support around 95.30, and then in and around here was about 94.20. The last of the defensive markets I wanted to show was dollar yen, and dollar yen also looks like it's bottoming here and starting to look back up. In fact, it's already the yen is weakening significantly against the pound as it rebounds, but also against the dollar here. We had this plunge under 100, a retest of the 100 round number. This is close enough to me to be a double bottom here, even though it's not exact, but you're essentially, we had a solid retest here, and now you're starting to explode to the upside. Big bullish engulfing day, 2 strong days of consolidation day, another strong day. You're breaking the 105 round number. You're clearing this 23.6 6% retracement here. You're back above 50 on the RSI. That's also a signal of momentum turning upward. Initial resistance here, 50-day average, about 26.28. Channel resistance here in and around 107.36, and the 38% retracement in and around 109. So we're seeing significant turns in the marketplace. The sentiment that had flooded capital into defensive havens now starting to go back out the other way into risk markets.